All right, let's talk about a piece of tech that's, quietly changing everything in the world of accounting: deep learning. Now, I know, it sounds super complex, maybe a little intimidating, but today we're going to break it all down. We'll look at what it really is, how it works, and why it's becoming an absolutely essential tool in your finance toolkit. Ready? Let's get into it.
This quote really gets to the heart of what we're talking about today. The whole point of this technology isn't to replace accountants, not at all. It's about giving you a serious upgrade. Think of it like this. The AI takes care of the grunt work, the what, which frees you up to do what humans do best. Focus on the why and figure out what's next. It's a partnership.
So, when you hear deep learning, what comes to mind? Probably self-driving cars, maybe some tech giant's latest gadget, right? For the longest time, it felt like something that was happening way over there, in Silicon Valley, completely disconnected from our world of trial balances and journal entries. But, well, things have changed. Big time.
Yeah, the truth is, it's already in your office.
Just take a look at this list for a second. We're talking about AP invoice extraction, fraud detection, drafting month-end commentary, even reading contracts. All of these tasks are being powered by deep learning right now. And yeah, those big names you've been hearing about everywhere, ChatGPT, Copilot, they're all built on the exact same technology.
So what is it that makes this stuff so different from the kind of automation you're used to? What's the secret sauce? Well, it all comes down to learning without the rules.
Okay, so here's the simplest way I can put it for an accountant. Deep learning is a system that learns patterns automatically, just by looking at examples. You don't have to write a single business rule or formula. So instead of programming a system with rules like the invoice number is always at the top right, you just show it thousands and thousands of invoices. And it figures out what an invoice looks like all by itself. It's basically automating pattern recognition.
And this right here, this is the big difference. This is the aha moment. With traditional machine learning, a human, you, had to do a lot of the upfront work. You had to pick the important data points, what we call features. Things like, say, year-over-year revenue change. You had to tell the machine what to look for. But with deep learning, the system just takes all the raw data and figures out the most important patterns all by itself. And that is the game changer.
Okay, so how does it actually do all this magic? Well, let's open up the accountant's AI toolbox and look at the 4 main models that you're going to see the most in finance. First up, we've got something called Convolutional Neural Networks, or CNNs for short. The easiest way to think about these, they are the ultimate document readers. They're absolute masters at understanding visual stuff.
You see their power most clearly in AP automation. I mean, that whole industry is pretty much driven by CNNs now. They're the engines that take a scanned invoice, a bank statement, or a messy receipt and turn it into clean, structured data that your systems can actually work with. They literally turned paper into usable digital information.
Okay, so CNNs are fantastic for static things, like a picture of an invoice. But what about data that changes over time? For that, we need a different tool. Meet the recurrent neural networks, or RNNs. These are our sequence specialists. They're built from the ground up to understand data that has a time element to it.
And let's be real, finance is all about sequences, right? Monthly trial balances, aging reports, cash flow projections. It's all data over time. RNNs are brilliant at learning the seasonality, the trends, all the little timing effects in that data. That makes them perfect for stuff like time series forecasting, modeling credit risk, or analyzing delinquencies.
All right, now we get to what is probably the most important model of the last decade: transformers. Think of these as the context analysts. They don't just read words one by one. No, they understand the relationships between all the words, the deeper meaning, even across super long and complicated documents.
If you've used ChatGPT, Gemini, or Copilot, you've used a transformer. This is the tech that can generate a variance explanation from scratch, draft an accounting memo for you, or read a 100-page contract and figure out the right accounting treatment. Let me be clear, your entire automation stack in the future is probably going to be built on this.
And last but not least in our toolbox, we have autoencoders. The absolute best way to think about these, they are your automated anomaly auditors. Their whole job is to learn what normal looks like for your data, inside and out.
And because they know what's normal, they can instantly spot anything that deviates from it. An unusual journal entry that just doesn't look right. A weird expense pattern. A sudden unexplained spike in a GL account. What this really is continuous auditing, powered by AI working for you 24/7.
Okay, so we've seen all the individual tools in the box, but how do they actually work together? Let's make this real. Let's walk through a classic example, automating parts of the, let's face it, often painful month-end close.
So picture this. Step 1. A transformer model reads all the journal entry descriptions and all the supporting documents. Step 2. An autoencoder, our Anomaly auditor, scans all the trial balance movements and flags anything that looks like an unexplained fluctuation. And then step 3. The transformer takes all that information and generates a first draft of the commentary for your month-end reports. It just handles all that tedious, time-consuming work for you.
Now, I know exactly what you might be thinking. This sounds amazing, but what about the risks? What about lack of control? What about these AI hallucinations I keep hearing about? And you know what? That is a totally valid concern. It's a huge deal. So let's talk about the safety switch.
Yeah, let's just be completely honest about the downsides. Deep learning is incredible with messy, unstructured data, but it can also be a black box. It's not always easy to understand how it got to an answer. And here's the big one. If it's not grounded in specific facts, it can just make stuff up. That's what a hallucination is. Which brings us to a really crucial point. The AI is there to assist, but the accountant, you, must always be the one to make the final call. The good news is, there's a way to manage this risk.
And that solution for any serious business use is an architecture called Retrieval Augmented Generation, or RAG. It sounds fancy, but the idea is actually pretty simple. Here's how it works. When you ask a question, the system doesn't just go to its own brain. First, it goes and finds the relevant information only from your own secure internal documents. Then, and only then, it uses the big language model to generate an answer based only on that specific information it just found. This is huge because it keeps the AI grounded in your reality, which helps prevent hallucinations and keeps your data confidential.
So let's wrap this up. What's the new bottom line for accountants when we're talking about deep learning?
Well, this table gives you a really practical snapshot of where things stand today. For some tasks, like reading invoices with OCR or drafting variance commentary, the technology is pretty much at a 5-star level. It's solid. For other things, like automatically mapping a whole trial balance to financial statements, well, it's getting there, but it's still developing. The point is, it's not perfect across the board, but for many things, it's already incredibly powerful.
And that brings us right back to where we started. Deep learning is basically a massive engine for generating answers. It reads the documents, it spots the anomalies, it writes the summaries. It takes so much of that manual cognitive load off your plate. And what does that do? It frees you up to focus on the really high-value stuff: interpretation, strategy, exercising your professional judgment. So look, the real question isn't, is AI going to take my job? The real question is this: now that AI is handling the answers, what bigger, better, more strategic questions are you going to start asking?